Good afternoon, everyone. I'm Candice Hickmott and I'm the Developer Regional Sales Manager for WA, SA and TAS. And it's my pleasure to welcome you today to our webinar. Today you'll hear from Cameron Kusher, REA Group's Executive Manager of Economic Research. Today, Cameron will unpack exclusive REA insights about the trends affecting the developer property market in WA and SA and what we can expect for the future. Cameron's presentation will go for about 30 minutes, and after the presentation, there'll be a Q&A session with the opportunity to ask questions via the Q&A button at the bottom of your screen. We've also collated all of the questions that came through via registration, which I'll also be asking as well. I'll now hand you over to Cameron. Thanks, Cameron.
Thanks, Candice. Thanks, everyone, for having me here today. I'm just going to share my screen and then we'll jump into the presentation. So yes, I'm going to run through what's happening in the South Australian and Western Australian property market. I'm going to talk fairly generally about what we're seeing in the market and then bring it down into the development sector and what it means for that part of the market. But to start with, I think it's good to have a look at what's happening with search activity on the for sale section of our website, which is data that we started publishing each week. And what you can see is that during the first round of lockdowns, well, South Australia and Western Australia have only had one round of lockdowns, you can see that people stopped searching for property, particularly properties for sale. And you can see a large decline over about 3 or 4 weeks in search volumes. But as lockdowns progressed, and I think as people realised that we were going to be coming out of lockdowns, there was a big rebound in search volumes for properties. And you can see that there through April. In South Australia, it was up about 15%. And then search volumes continued to climb until about June. And then after that, things became a little bit more volatile. But generally, we've still been seeing the volume of searches trending higher. And you can see on the right-hand side of the chart there that search volumes in South Australia are still significantly higher than they were 12 months ago. And for Western Australia, it's a very similar trend that we're seeing as well. You can see the big fall away in March and April, the rebound, and then some weaker conditions now. But again, on a year-on-year basis, the volume of properties being searched for sale on our website is significantly higher than it was 12 months ago. Now, if we break that down a bit into what that looks like, Western Australia has actually seen the largest fall in search activity from its recent peak. Now, we get this search data on a weekly basis. Some of the data about development we only get on a monthly basis, but what it looks like is actually happening is since Home Builder was announced and since the West Australian government announced their additional stimulus, that's actually taken eyeballs away from the for sale section of our site, and it's started to go more so to the new home section. So people are looking for builders, they're looking for developers, and they're going to their project sites and looking to go and build or buy brand new homes rather than looking so much in the established market. Elsewhere, you can see generally search volumes are pretty close to their peak, if not at their peak, outside of course, Victoria. So even though that decline in Western Australia doesn't look great, have a look at on a year-on-year basis. Searches for properties for sale are up 45.7% in Western Australia, and they're up 36.2% in South Australia. So it's a pretty strong outcome in terms of the people coming to our website looking for properties. The $100 million question from that is how many people are actually seriously looking for a property to buy and how many are just sort of tire kickers? And I'll go some way to answering that a little bit later in the presentation. If we look at the rental market, similar trends in the rental market. I won't talk too much about rents throughout this, but I think it's important to consider, especially with shut borders and home builder being in place, that is encouraging people to move out of rental accommodation into their own home. And obviously the overall demand for rental properties is lessened with borders closed. In saying that, South Australia and Western Australia don't see as much of the overseas migration flowing to those states as, say, for example, New South Wales and Victoria do. But again, you can see the fall away in search volumes in March, the spike through April, and then a little bit more volatile more recently. But again, search volumes are much higher than they were a year ago in South Australia. the increase in search volumes relative to a year ago in Western Australia isn't quite as significant as it has been in South Australia. But again, more people are looking for rental properties now than they were 12 months ago. That's a trend right across the country. And I think what we're actually seeing is people that are currently renting are very closely monitoring the market to see, what else comes up. Can I get something equivalent to the property that I'm in at the moment for a better price? And I think landlords are actually doing the same thing as well, looking at what the competition looks like, what price the thing's actually renting at. So if we look across each state, you can see that search volumes for rental properties are down across the board. Western Australia has seen one of the smallest declines, only down 4.6%. South Australia, a much larger decline, 15.7%. And as you'd expect, Victoria is seeing the largest overall fall. But year on year, search volumes for rental properties are up 9.6% in South Australia, and they're up 25.4% in Western Australia, which is, again, shows that there is a lot of interest in the rental market at the moment. Now, one of the things we've started tracking is what's happening with transactions on a weekly basis. And the way we do this is we track the properties that are listed on our for sales, on the for sale section of our site each week. And then we count those properties that are moved from the for sale site to the sold section of our website. And what you can see over recent weeks, for most of the past 10 weeks in South Australia, there's been more properties sold than at the same time last year. Now, last year wasn't a particularly strong market, but when you consider we're in the middle of the first recession in almost 30 years, we are seeing a higher number of transactions than we were 12 months ago, which is, you might say, is a little bit odd, but I think it really speaks to the stimulus that's in place, and probably the stimulus that's a little bit understated, and that's interest rates sitting at their lowest levels ever and unlikely to move higher anytime soon. And it's a similar story in Western Australia as well. You can see 2020 at the start of the year, sales volumes were above last year. Then we had the COVID lockdowns and volumes fell. They didn't plunge as deeply as a lot of people thought they would. But again, since the end of that lockdown, we have been seeing a higher number of sales in Western Australia than we saw at the same time last year. And if we look across each of the states, Victoria is now actually the only state with fewer sales than what we saw at the same time last year. Have a look at South Australia. Last week's volume of sales was 33.5% higher than at the same time last year. In Western Australia, it was up 24.7%. Northern Territory is obviously a big figure, but on a weekly basis, we're looking at sort of 10 to 15 sales in any given week. So it's a very low volume. But nationally, sales are 16.5% higher than they were 12 months ago. And then we can actually break this data out into the types of properties sold. So whether that be house, unit or land, and land's the really interesting one at the moment, because we tend to think that home builder is really positive for new housing estates, but it's also proving to be very, very popular for vacant land listed for sale. And we do know that developers will sometimes publish their residual stock once it's sort of established and got a title. They'll advertise on the general for sale section of the site, but also there's, vacant land scattered right throughout each capital city. And you can see here in South Australia, there has been a really strong surge in vacant land sales since Home Builder was announced. And it's a very similar story in Western Australia. Look at those first couple of weeks. So week 23 was basically when it was announced. And you've got vacant land sales jumping from 40 to 160 a week in the space of a very short amount of time. And even now, vacant land sales in Western Australia are about 75% higher than they were at the same week last year. So that's obviously really good news for builders, because people are buying this land. There is the home builder stimulus in place, so you would be expecting that they're going to be seeking out a builder and looking to kick off the construction of a home on this vacant land pretty soon. So I talked earlier about the fact that are the people that are looking for properties for sale serious about about buying a property or not? And that's a question we've been trying to answer. And we've started producing a weekly demand index. And the demand index essentially looks at the behaviour of people on our site, and if that behaviour has historically been the type of behaviour someone that is going to transact on a property would show. And what I mean by that is it's how they interact with the listing. So we have three buckets essentially: low engagement, medium engagement, and high engagement. So someone with low engagement would just look at a listing, maybe flick through a couple of photos and never come back to that listing. Obviously, you'd step up to medium there, and then a highly engaged interaction is someone that will flick through all the photos, click on them, expand them, look at the floor plans. They might email the real estate agent. They might save the listing. They might save an inspection time. They might email a copy of the listing to a friend. So that's someone that's, and then they'd come back and they'd look at the listings over and over again. So that's someone that's highly engaged. And with our demand index, what we're actually doing is taking those highly engaged people, showing those highly engaged search behaviors and tracking that over time. So the demand index is of high demand. So again, you can see that the trends are quite similar to what we've seen in terms of for sales search volumes, a fall away in March and a rebound. It is starting to drift a little bit lower, the demand index for South Australia, but it is substantially higher than it was 12 months ago. And similar, very similar shape when we look at Western Australia, but demand is significantly higher than it was 12 months ago in Western Australia. And I think this is encouraging. And again, I think it talks to the fact that interest rates are so low at the moment that people are, seriously considering purchasing a property or transacting on a property, whether that be a rental property or a property for sale. They're just maybe not quite over that hump yet, and probably grappling a little bit with the fact that we are in the first recession in 30 years, but they're in a position maybe to go and transact on a property. And I think there's a few reasons for that. I think the more time people spend at home, the more your property becomes a little bit unbearable. Everything that is wrong with it that you can kind of forget about when you go to work 5 days a week becomes unbearable. I think also a lot of businesses are going to be giving people more flexibility to work from home going forward. So that might be an impetus for people to actually get the right home. I've also talked about interest rates, but I think one of the other things is people are still restricted in as much as how they can spend their money. So, if you're someone that likes going on an overseas holiday, and I'm not talking about the jump from WA to Bali, I'm talking about, go to Europe or go to the US for 3 or 4 weeks of the year, you're probably going to spend $15,000, $20,000 on a trip like that. You certainly can't do this year, and you're probably limited to being able to do that again next year. Maybe late next year you could do it. So a lot of people have actually got more money than they would, and they're looking at what they could do with that. And I think that we're starting to see some of that flowing into residential property, particularly in Western Australia, where you've got home builder and you've got the government stimulus as well. If you had $15,000, $20,000 put aside for a holiday this year, that could very easily be a deposit on a new home, given all the incentives in place. So if we look at that high intent search activity, nationally it's fallen 10.2% from its peak. Generally, it's pretty close to its peak level in most states. South Australia and Western Australia have seen a bit of a fall, but still less than 10% decline. Victoria is the market where that high intent interaction is really significantly lower. But having a look year on year, you can see in South Australia it's up 32%. In WA, it's essentially up 40%. Over the year. Now, to my next slide, which I just gave you a sneak preview of, is the number of views per listing. And this is another way that we look at demand. It's a bit of a different way, but we take the properties that are listed for sale or for rent. In this case, it's for sale. And we take the number of searches we get, and we look at the average number of views that a listing can expect to get in any given geography. So this is looking at it over time. You can see South Australia, one of the stronger markets for views per listing, probably middle of the pack. And Western Australia has been one of the weaker markets, which really reflects, I guess, the state of the housing market in Western Australia over recent years. You can see Western Australia and Northern Territory definitely seeing lower views per listing over recent years, whereas Tasmania, which has been one of the strongest markets along with Victoria, generally seeing a relatively high number of views per listing. But let's delve into it a little bit deeper. So in terms of the average views per listing in July, in South Australia, just over 1,100. In Western Australia, around 640 views per listing, which is quite low relative to other states. Now, the second chart looks at where we were in February compared to now. And I use February as the benchmark because February was, the market was going all right. It's really the period pre-COVID. So views per listing in South Australia are up 28% from where they were in February. In Western Australia, they're up 35%. So again, it's just one of those other indicators that says that there is a lot of interest in property, there is demand out there. And again, year on year, you can see that views per listing were up 46% in South Australia and 66% in Western Australia. So how does it look across the region of each of those states? So this is looking at the SA4 geographies of each state. So in Adelaide, you can see that the south region of Adelaide has got the highest number of views per listing and the north the lowest. And you can see pretty good growth right across the board, but it's the south where we're seeing the highest year-on-year increase in views per listing, up 61.8%. And you can see Central and Hills, which is generally the more expensive part of the city, is seeing the lowest rate of growth in views per listing at 36.5%. Outside of Adelaide, obviously regional markets tend to get much lower views per listing, but even in those areas, some decent growth over the last 12 months for all three of those. And then turning to Western Australia, again, we know that across Western Australia, views per listing is quite low. The inner suburbs of Perth get the highest number of views per listing. Again, some of this is probably a bit of that property porn, people looking at all those nice houses in the inner suburbs, but have a look at the growth. Now, Mandra's still got very low numbers of views per listing, but it's up 78% from where it was 12 months ago. So it shows that interest is increasing. I think it probably also highlights how little interest there was in that market 12 months ago, but I think that's really changing. And obviously that's a bit more of a lifestyle market, although lifestyle, a lot of Perth is pretty lifestyle, but people that are looking for more affordable options, down by the beach, Mandurah becomes a little bit more popular. And the northeast and the northwest, you can also see some pretty strong growth over the last 12 months. And then in regional Western Australia, Bunbury has seen the biggest jump in views per listing again. So again, potentially some people looking to lifestyle areas, showing a bit more interest in those markets. And Outback North, the highest number of views per listing, but the lowest growth, but 70% growth over the last 12 months is still pretty strong. So I think it's all important to look at the rental market because we know that there's some challenges facing the rental market. And I think also particularly from a new housing sector, particularly apartments, investors are an important part of that market. So on a views per listing basis for rents, you can see South Australia actually has one of the highest number of views per listing. Only Tasmania has more. And Western Australia has been seeing views per listing trend up since March of this year pretty rapidly as well. So again, in terms of a rental property in South Australia, you can expect to get about 1,800 views per each listing. In Western Australia, just under 1,400. Compared to February, you can see that views per listing for rental properties have jumped marginally, in South Australia, up 2.7%, up 40% in WA. And then year on year, South Australia has actually seen a slight reduction in the number of views per listing, whereas Western Australia has jumped a lot. So again, I think we'll quickly run through the regions of each city. So the southern suburbs of Adelaide are getting the highest views per listing for rental accommodation, followed by the north. Have a look at what's happened in Adelaide Central and Hills over the last 12 months. There's been a 31.5% drop in rental views per listing, while the other areas have actually seen an increase. And in the regional markets, we're seeing a jump in views per listing for rental accommodation too over the year. And then in Western Australia, again, growth across the board, but the inner suburbs have seen much smaller rates of growth than the other areas of the city. And this is something we're really seeing replicated right across Australia. And I think it talks to the challenges for the inner city housing markets and rental markets, obviously, whilst the international borders are shut and whilst domestic borders are shut as well. When people migrate to some of our bigger capital cities. They generally want to be fairly close to the city centre. You know, a lot of people that come to Australia are coming to study, so they want to be close to the universities. A lot of the universities are in those inner areas. You know, younger people tend to want to be where the action is. And we have seen this weakness in search volumes for rental properties in inner city markets, particularly in Sydney and Melbourne, but also elsewhere around the country. And then again, Mandurah is a really interesting one, that there's been, you know, the views per listing for rental properties in Mandurah have effectively doubled over the last 12 months. And then in regional Western Australia, again, you can see a really big increase in views per listing in Bunbury. So in terms of the market, I think it's really interesting because we were seeing the housing market recover after a couple of pretty weak years before COVID hit. Now, COVID's clearly having a bit of an impact on the market now. You can see, particularly in Sydney and Melbourne and Hobart, price growth is rolling over on an annual basis. Perth prices have been falling for a number of years, but they're actually still trending closer to zero now. And in Adelaide's kind of just that slow and steady market. It's never really the best performer. It's never really one of the worst performers. There has been a slight downwards trend emerging in terms of price growth on an annual basis. But I think it does kind of give me some hope that coming out of this, there is a level of pent-up demand. We do have very low interest rates, that we can start to see prices increasing again. Of course, the challenge will be how these mortgage holidays go and how many people can actually get back to paying their mortgage come the end of those holiday periods. So looking more specifically at what's happening in the developer space. So this is looking at development page views, the year-on-year change. And again, you can really see the evidence of the impact of home builder. Interestingly though, developer page views and developer inquiries, which I'll show shortly, were both starting to pick up even before home builder was ever announced. So home builder was announced on the 4th of June, and that really supercharged page views and inquiry, but it was already picking up long before that. I think the other clear message from home builder is it's much more of a stimulus for land estates than it is for apartments. And you can see that there, where year-on-year page views for apartment projects in South Australia are actually lower. If we look at inquiries, again, this is South Australia. I'll run through WA after we finish here. You can see that inquiries have just shot up dramatically in South Australia for land estates, whilst they're fading a bit for apartments. And then the makeup of where the inquiry is running to, you can see that, you know, generally they've been, well, historically apartments were getting the largest number of page views, then it switched over to land estates. Then through last year, land estates were starting to dominate again, but there has been a very large fall away in inquiries flowing to apartments as opposed to land estates in South Australia. And again, this is a trend that we're seeing right across the country at the moment. Again, speaking to the fact, I think that the home builder stimulus is much more of a stimulus for the land estate market as opposed to the higher density apartment segment. And then looking at Western Australia, you know, very similar, although apartments seem to be holding up much better in Western Australia than we're seeing in most other states. So page views have picked up. Again, they were picking up before home builder was even ever announced, both for apartments and land estates, but obviously a much larger increase for land estates. The year-on-year change in developer inquiries. So in June, developer inquiries to land estates were up about 700% from where they were the previous year. Now, it doesn't look that impressive for apartments, but that's actually about a 180% increase in developer inquiries to apartments in June compared to last year. Now, it looks like a sharp downturn, but developer inquiries in July were still 200% higher for land estates than they were a year ago, and they were still up about 80% for apartments. So it does show that the stimulus that's in place is really working effectively in Western Australia. And obviously home builders helping land estates, but some of the other stimulus is really helping the apartment sector as well. And then again, if we look at inquiries over time, we can see the impact of that real sharp increase in inquiries to land estates. Again, It's generally been the apartment sector that's seen the highest number of inquiries over time, but that has definitely changed in Western Australia over the past few months. So just my final couple of slides, and I think a few things to really be mindful of. The first one's consumer confidence, and essentially what we're looking at the moment is the first recession in almost 30 years. And you can see that consumer confidence has actually been trending down since about 2018. People forget, because it seems like a lifetime ago, that we had the bushfires at the start of this year. And you can see that that certainly was a hit to consumer confidence. But then we had the COVID lockdowns, and ANZ tracked this data all the way back to 1974, and they've never seen confidence fall as low as it did during the COVID period. You can see shown on that slide where we were during the GFC. It was a much deeper loss of confidence than we saw then. But honestly, if you told me in March that confidence would be back to almost 100 points by June, I would not have believed you, but that's what we got. Unfortunately, what happened though is we had that second round of COVID outbreak in Victoria, and that led to slumping consumer confidence right across the country. So for 7 weeks, confidence fell. But the last 2 weeks, we saw a 2.4% gain the week before last, and then a 4.6% gain last week. So I think that as case numbers come down, touching wood that the case numbers remain low outside of Victoria, I think there's a very real possibility that consumer confidence over the end of this year can rebound quite quickly. Now, I don't think it's going to return to average levels, but I think we can see a pretty swift recovery in consumer confidence, getting back to a level that's better than what we saw during the GFC, but certainly not back to normal times, because we're not going to be in normal times before the end of the year. And then the consumer confidence, the business confidence rather, is another important key metric. And again, you can really see that V-shape taking place. Now, this latest data doesn't take into effect the second round of lockdowns in Victoria. So the next release we get is probably going to see a drop in business confidence and business conditions again. But of course, if things can start opening back up and we don't have to go back into lockdowns in any states or territories, then I think we can again see a pretty strong rebound over the end of the next few months of this year in business confidence and business conditions. But again, the caveat is that they're probably not going to return to levels we saw before, but they can certainly be a lot better than they are currently. And that is the end of my presentation. I'm going to just flash up a poll, and we'd love for you to answer that, and then I'll hand you back to Candice to do our Q&A section.
Thanks, Cameron. As always, some really, really good insights there. So we're just moving to the Q&A part of the session. Thank you to everyone who submitted their questions at registration. We've shortlisted and consolidated these. However, if there's anything that's missed, as I said before, all you need to do is click the Q&A button at the bottom of the screen and type in your question, and I can ask those on your behalf. So Cameron, we'll get straight in. Do you have any predictions for the WA and SA markets for when the home builder grants end?
That's really the $100 million question, and I think everyone's a little bit concerned about what happens when home builder grants end, because essentially what they seem to be doing at the moment is pulling forward a lot of buyer demand, and unfortunately first home buyer demand is kind of finite. There's only so many people that are in a position to be able to buy their first home within the next few years, and a lot of those people are going to buy this year because this stimulus is in place. In Western Australia, probably a little bit more confident, just because the market has been underperforming for a number of years. There's a lot of pent-up demand, but also I think a lot of Western Australians, particularly younger Western Australians, leave WA and go and work in Melbourne or Sydney, and maybe don't come back till they're much older, or don't come back at all. Potentially working from home is making them reconsider that, or maybe some of the people that are from Western Australia but live in and work in Sydney and Melbourne will now be given the flexibility to go back to Western Australia and live and work there. So I think Western Australia is probably better placed, and I think the other point is WA and South Australia are not as heavily reliant on migration to fuel housing demand as places like Sydney and Melbourne are. In terms of South Australia, I think there's going to obviously be some challenges there, same as anywhere else. But one thing I would say about South Australia and some other states and territories is I think they can really benefit from work from home as well, because we tend to think of working from home as, okay, I live in Melbourne, I can move to the Mornington Peninsula, or I live in Sydney, I can move out to the Southern Highlands. But I think another bit of flexibility that people might be given is, okay, you're doing a job in Sydney, but you can do that job from Adelaide, or you can do that job from Brisbane, or you can do that job from Hobart. Perth, for a lot of people, might be a little bit of a stretch because it's not really that easy to jump on a plane and get to Sydney or Melbourne. But I certainly think some of the smaller capital cities and their housing affordability advantages could be really appetizing for people, especially if businesses say, you know, the head office is in Sydney or Melbourne, but you don't have to be in the Sydney or Melbourne head office. You can be in one of those smaller offices, and as you need to, you can fly to Sydney and Melbourne for important meetings and things like that. Notwithstanding, I don't think we're going to be flying too much for the next year or two anyway. But yeah, I think that's what we're looking at coming out of this.
Yeah, I definitely think working from home flexibility is the way of the future.
Yeah.
It makes the different jobs open up in WA and SA because of that. So next question. According to UDIA data, surprisingly, WA has the smallest average lot sizes in Australia. How is this impacting pricing and valuations for WA real estate?
Well, I think part of that has been the strategy of the WA government to make housing more affordable, essentially that's how developers do it. They offer up smaller lot sizes and then try and offer more amenities in their new housing estates. But again, I think the affordability story is a really strong one for both Western Australia and South Australia. The feedback I've heard from property developers in Sydney, for example, is home builder basically didn't work because by the time you buy the land and then sign the building contract, you couldn't bring that property in under $750,000. Very different story in South Australia and Western Australia. You know, land's cheap. You can get a lot of house for $750,000, which definitely makes it attractive. So I think, not everyone wants a tiny block. I think it's still really important to have a mixture of some of those smaller lots and some larger lots. But certainly it does help housing affordability when you do have smaller average lot sizes.
Absolutely. Next question. Have we ever had a situation like this before with such large grants? What happened when they finished? What were the impacts in market and how long did it last?
Yeah, so I guess 2008, during the global financial crisis, they had the first homeowners grant boost. So there was already $7,000 from the federal government on offer. There's another $7,000 offered through the boost, and then another $7,000 offered if you built something brand new. So you could get up to $21,000 in grants. So they weren't as large as the $25,000 you get in home builder, but they were certainly large. And we did see a big pull forward of demand, particularly from first home buyers. And then after the grants ended for a number of years, first home buyers remained quite low. So again, I think that's one of the things we need to be mindful of, that we're pulling forward demand from first home buyers. If we look at who's lost their jobs and who's lost income, it's overwhelmingly been people over the age of 30. So the question after this is going to be, where do those next wave of first home buyers actually come from? And we could actually be doing a bit of some damage to that next wave of first home buyers by offering such big incentives and pulling forward a lot of that demand into this year. So I think it's something that we definitely need to be mindful of.
Did you have any predictions for the established housing market in January 2021 after the new builder grants?
Yeah, it's an interesting one. I can't say where the data's from, but some stats I got thrown at me today about what's happening with mortgage holidays were a bit scary. So I think, although we don't have the mortgage cliff that everyone was talking about in September, I think there are definitely going to be some challenges come January when the extension of the additional 4 months of mortgage holidays ends and we don't have home builder anymore. I seriously think there will be some form of additional stimulus from the government. I just don't know what that's going to look like. But one thing I would say is I think that Western Australia and South Australia, I mean, South Australia has been a very steady market. As I said throughout, it doesn't tend to have really big booms. It doesn't tend to have big price falls. Obviously, the cost of housing is a lot cheaper in South Australia and Western Australia nowadays. Plus, Western Australia has had, 4 or 5 years of falling prices. It hasn't been like Sydney and Melbourne and Tassie where prices have been booming. So I definitely think there's some challenges for the established housing market, but I think they're just going to be much more prevalent in the likes of Sydney and Melbourne and Hobart than we're going to see in the likes of South Australia and Western Australia. But it's certainly something we need to be aware of. And, if I was advising, if I was a bank, and I'm not a bank, but if I was a bank, I'd be advising people on mortgage holidays to really have a good hard think about what the likelihood of your job coming back is, or you replacing that income that you've lost. And I would say to them that it would be better to be, trying to move out of that property now rather than waiting to the end of those mortgage holidays, because, human nature is people will just put things off. They'll be optimistic about things and things are going to get better. But the reality is, in a recession, the unemployment rate goes up, jobs never come back, and the unemployment rate takes a long time to come back down. So some businesses are not going to come back. Some people aren't going to get those jobs back. And I think it's better to be on the front foot, but that's easy for me to say when it's not my house that's in that position, right? So.
Yeah, it is. So you did mention the mortgage holidays, but what are your views on, once JobKeeper stops and the impacts that that'll have?
It's going to have an impact because the Reserve Bank has said that they expect the unemployment rate to peak at 10% later this year. So they forecast out 2.5 years, and they're saying in 2.5 years' time, the unemployment rate is still going to be 7%. So that's still a high rate of unemployment. So again, there's definitely going to be challenges. There's going to be loss of income. I think the other challenge is a lot of people, anyone basically under the age of 50 hasn't worked through a recession in Australia. So it's a very different experience. If we look at some other, I was just looking at this data before. So the last recession, the unemployment rate before we went into the recession hit a low of 5.8%. And that was in 1989. It didn't get back to 5.8% until 2003. And if we look at the global financial crisis, the unemployment rate got as low as 4% just before the global financial crisis. Before COVID hit, we were sitting at a 5% unemployment rate. So it never even got close to falling back to that 4% unemployment rate we saw before the GFC. So that tells you how long it takes for the unemployment rate to fall coming off the back of a recession. So, it's important to keep that in mind and be realistic about things if you can be.
Yes. One more question and then we'll move to the questions in the Q&A board. So this one here, I'd be interested to know more about Cameron's insights into land sales by SA region. You did answer this a little bit, but they're looking more at, sort of growing.
Yeah, I mean, I think we're seeing really strong demand in the land market, both, developer stock and vacant land that's kind of sitting there, whether that be residual vacant land stock or other. And I think that's going to continue. I mean, $25,000 is a pretty large handout. In South Australia, in Western Australia, rather, you obviously get more than that. And that does go a long way. And I think that combined with the fact that interest rates are so low at the moment, it's no surprise that people are taking that up. And whilst we say it's first home buyer stimulus, the reality is there's a lot of people that are probably sitting in their first or second home that would like a brand new home, would like a better home than what they're in at the moment. They're going to take advantage of this offer as well, because it's pretty rare that they get stimulus thrown at them as well. It's usually very much just focused on the first home buyer. So I think at least for the rest of this year, the vacant land market and the new home market is going to be really strong. But again, as I said before, the question is what comes after home builder and what does that look like next year?
Which is a nice little segue into one of the questions that's been asked on the Q&A board. So do you see a further government grant stimulus to assist the market in 2021 to continue to help build To continue to help both land developers and consumers. Otherwise, there will be a big impact on the overall industry.
Look, I think the reality is that there will be. There's a proven, economic benefit from people buying homes. They have to fill those homes with furniture, white goods. Often people buy a brand new car when they buy a new home. So I definitely think there'll be additional stimulus. It probably won't necessarily politically be that popular, particularly with some younger people that feel as if they're locked out of the market. But the reality is government is going to have to provide stimulus to a lot of sectors coming out of this recession. Whilst they sound reluctant to do that, the reality is they're not going to have any choice. Otherwise, the unemployment rate's going to be high. The best thing we can do probably as an industry is talk about it, because the more you talk about it, there's more awareness and the more likely things are going to happen. But the reality, again, is that property has pretty strong lobby groups with the likes of UDIA, Property Council, Master Builders Association and the Housing Industry Association. There's plenty of people that will be talking very often with policymakers about what's happening and what the challenges look like once home builders finished.
Thanks, Cameron. So we don't have any more questions. If anyone did have a question, please type it into the Q&A box. Otherwise, thank you so much, Cameron. As always, some really great insights. I definitely enjoy sitting through your presentations and gathering more knowledge about the industry. Thank you everyone for joining us. We will be uploading the recording of this presentation onto our Development Hub as well. So if you are wanting to view it again or share with your teams, you can view it there. But have a really great Wednesday afternoon and look forward to seeing you next time. Thank you.
Thanks everyone.